With inflation skyrocketing, the Fed's raising interest rates, stocks plunging, the invasion of Ukraine by Russia persisting, and the price of oil on a continuous leap. Are these indicators all reliable enough to show us the warning signs that the US economy is headed for a recession? In this episode, we shall look at all of this to ascertain for ourselves if a recession is looming in the airs of the US economy. Stay tuned. It is no news that at the wake of the COVID-19 pandemic, economies across the globe suffered tremendous setbacks caused by lockdowns. And just when many economies started reopening this 2022, the world economy is suffering yet another stroke with the Russian invasion of Ukraine. In all these happenings, the US economy and her policies have been tested. To start with, inflation hit a record high figure of 8.3% in April 2022, the second highest the US economy has ever witnessed in 4 decades after that of March 2022, which stood at 8.5%. This can be seen in, for instance, oil prices, which have again crossed $100 a barrel. As per Jeremy James Siegel, professor of finance at Wharton School of the University of Pennsylvania, this is a phenomenon that is likely to continue. And as a way to slow down the skyrocketing inflation rates, earlier this year the Feds have increased interest rates thrice. First was in March 2022 by 0.25%, in May 2022 by 0.5%, and in June 2022 by 0.75%. Another very strong indicator is the GDP growth rate, which fell in the first quarter of 2022 by 1.4%. This is in sharp contrast to the growth rate of last year's fourth quarter, which grew by 6.9%. It is worth noting that microeconomists declare a recession when there are 2 consecutive quarter fours in an economy's GDP. So at this moment, the economy is sitting on a cliff. Another quarter four would be disastrous for the US economy. The yield curve is now inverted, with investors now demanding higher interest yields on short-term treasury bonds than on longer-term bonds. Is also a scary indicator. The 10 and 30-year treasury bond yields have been down the highest, at up to 11 basis points. Stocks are also down, and at the close of business of the 18th of May 2022, the S&P 500 was down 5%, with a plunge in consumer shares surpassing 6%. One of the index's components, Target Corporation, slumped almost 25%, being its highest share price fall since 1987. The Nasdaq 100 fell more than 5%, with one of its biggest components, Amazon.com Incorporated, sliding over 7%, and the Dow tumbling 1,160 points in worst trading day. Even though these indicators are quite significant in predicting an economic recession, nothing is certain yet. With a US economy that is still witnessing strong consumer spending despite rising inflation rates, job growth being on the rise, unemployment rate sitting at a near 50-year low of 3.6%, and despite the setbacks of the COVID-19, households and their incomes have grown. With this, the Federal Reserve Chair Jerome Powell thinks the economy is in good shape for now. Thank you for watching this episode. Catch you in the next one. Bye.